What's up, Focus fam? Happy Wednesday. It's Chan, man. Hope you guys are having a wonderful week. I hope everyone got through FOMC and good old Powell day. We get an exciting end of week ahead of us. It's been a very volatile, but in my opinion, a pretty straightforward market. So I'm excited as always to dive into this video and share some thoughts and help you guys finish the rest of the week on the right note. So diving right in here to the market, gonna always just reiterate this daily cloud. This has kind of been my pitch all year where I don't care why it's happening, whether it's Powell, whether it doesn't really matter. Every drop this year has been bought up and found support right around that daily cloud. Happened once, twice, three times, got pretty close this time, hit it here again. And then the times that it doesn't, it holds the 50-day simple moving average, something that's been correlated really, really nice this year. If I just throw on the 50-day simple, you'll see what I'm talking about. Slap that on real quick. And boom. So again, very straightforward here, where when we don't hold the 50, we hold the cloud. We don't hold the 50, we hold the cloud. Fast forward, we held the 50, we held the 50. Last week, we started to sit on it, it became a decision. Anytime we go sideways, we get nice little intraday squeezes, like a 4-hour, and the market makes up its mind. Well, instead of holding the 50, like it's done the last two times, it did the other trend that's happened all year, and that's break the 50 and go right to the cloud. If you take a look here, we got that beautiful support right at the bottom of that cloud, kind of our first little test, truly towards the bottom of it, right? Little creepy here, but we continued to hold. So I want to continue, guys, to use a very straightforward approach to this market. And here's what I'm going to continue to watch. One is, do we hold the cloud? If we start to break this cloud, you can use a very simple level. I like to use the exact level, but you can call it 4,300. If at some point this week we drop back down and we retest the lows of the week and we break 4,300, we're going to be in some trouble. It's going to be the first time this entire year that we're under the daily Ichimoku Cloud. And the way this works, guys, is on a bigger picture trend, like a daily chart, the trend's intact until we're underneath. So this could, I'm not here to speculate, I'm here to react and be prepared for any scenario. If we do break under here, it could start our first bearish trend. That's kind of my pitch here, guys, where if it does continue to hold the cloud, we got to get back to the 50 and we got to start to reclaim that 50 or we're not going anywhere. So again, just to kind of zoom into here. And remember, guys, from last week where we held the 50 and all we did was pop and continue to reject. So we can get these little pops. Doesn't mean it's necessarily a bottom. We still got work to do. So looking at a very basic zone here, today's HOD, that low captures that candle as well. Also want to focus on that prior wick. So just call it a little zone here with that 50-day simple and these recent little, resistance levels. If we can start to crack through here, then we're proving to ourselves that the bullish, bias still is intact. However, until we break out of that, we could be in a territory where, just like last week, every pop is a really nice short. Every pop is a really nice short until we head lower. We popped here and got shorted. We popped here today, and despite what happened with the Fed, we actually did finally put in a green candle. But it's not out of the mud until we break through these levels. Another thing I want to focus on here, just to show you guys my actual drawing set. That ain't it. Here we go. So one big thing, whenever a market or stock, doesn't matter, has to bottom, it needs to put in a higher low. So we finally got our higher low overnight last night off of that Monday low. We get the drop, we get a beautiful pop to resistance, we pull right back, we create a higher low. We had a little pop here on the China Evergrande stuff, if you're familiar with that situation. And we rallied nicely today. We opened, we popped that zone, we pulled all the way back, we popped again, and kind of just played ping pong. So the way I'm seeing it, guys, and let me add a little more time here on this chart, just to zoom out a bit. Here we go. If we extend this trend line, this is another key level that I want to keep an eye on. You can see it kind of leads into tomorrow's session right around that key zone. I love we can get extra confluence lining up, trend lines with key levels. So again, we held it today, but we also rejected the upside zone. Where tomorrow and into this, end of week, we have a few scenarios. One is we tread lower and we retest that trend line. Two is we bounce off of it and we continue to tread higher and we get through the zone successfully. At that point, that's when we have the 50-day simple up above here near that 44.30-ish range. That's what we really have to get through. This is going to be our first step. Vice versa, if we do start to break this wedge, then we could really start to flush, start to head back towards big key levels, and maybe even back down towards that daily cloud, those big lows that we talked about. So that's how I'm seeing the market, guys. Again, not here to predict, rather just lay out very well thought out scenarios and react to price action. That's our only job as traders, right? Market gaps up today, pulls back, holds nicely, and explodes. If we hold tomorrow, we could continue to explode. If we just sit here and chop, let the market squeeze. But want to continue to watch the higher lows here. Want to continue to watch these key levels. So you guys can mark these down. And I want to look for that push back up towards this purple line, which is the 50-day simple. And that starts with breaking through 4,400. If not, we can go retest that trend line, which could either be another good dip buy or start to break down. We'll have to wait and see. But that's why I'm seeing the market here. And actually, one more thing I want to talk about, skirt back, is these are really big levels. And whenever we're at big levels, we want to be patient because we can really pull a lot of information and get ahead of the curve. Another, confluence here of this key level is it's also the weekly mean, something that we haven't seen in quite a while. If I actually zoom out in this chart, we haven't really gotten the weekly mean till beginning of the year and didn't even kiss it. This is our first kiss all year. So just like the daily chart, if you're familiar with reversion to the mean concept, this is a healthy pullback. Right at daily cloud, right at big psyche levels of 4,300, right at the weekly mean. This is going to be a very pivotal moment for the market leading into Q4. Again, do we break this cloud, break the weekly mean, and start to tread back down towards, 4,200, 4,100? We're going to find out, but I love how the market's setting up. I think we got another good drop coming or a good little pop like we've continued to see all year. Until that changes, I got the same bias and I'm trusting the same tools. Just got to read and react. If we look at tech, another really beautiful level in play, and that's the daily cloud, just another classic pullback. So tech is by far the strongest, index. It didn't want to roll over when when ES broke the 50. That simply sent NQ to their 50, right? Always a little bit, behind when it comes to the drop, AKA they're stronger. So they got the drop to the 50 and they broke and hit the cloud while ES is at the bottom of their cloud. So tech is also holding exactly where it needs to hold. That prior little dip right at the cloud and they're right back at the 50. Kind of the journey here that ES has to take. NQ holds the top, ES holds the bottom. NQ's back at the 50. ES needs to get back to the 50. So we can watch all indexes and get a sense of what's happening. So for NQ, very simply here, it needs to hold the cloud and it needs to break through this 50 and start to rally back up towards these levels that kind of started the sell-off, right? Kind of duplicate the zone. You want to focus on getting back to this territory. And it all starts by holding that 50. Where again, if we reject the 50 and we roll back down to these levels, it could get ugly, especially if tech starts to break their cloud. A lot of weight in tech. They can drag this market. And then as I've talked about, YM is the one that truly drags us lower. The last recent drop, they took that out immediately. They took out the 50 before anybody. They took out the cloud before anybody, and they dropped back down towards these, prior sell-off levels. If you look at 719, right, for 719 on ES, that's back here. So they all do this pattern just at a different time. YM broke the 50 first, broke the cloud first, broke the bottom of the cloud, and stopped their next level, while ES stopped at their cloud bottom and NQ stopped at their cloud top. So again, guys, I hope this all makes sense. Listen to this a few times if it's not, because once it clicks, it's a very clear picture. So we need YM, as you might imagine, to hold these key levels. It already breached this, but it needs to hold here. And it needs to get back inside this cloud. So you have a nice little zone to focus on with that cloud bottom and that big key level. If it can get through here, what comes next? Back to the top of this range, back to the 50, back to cloud top. And everything else will be doing what they need to do in the meantime. And again, this is all just confluence, guys, where if you see YM reject here, NQ reject the 50, ES reject the cloud, we all can roll over. Love it. If it breaks, We got to drop to here. Really, really enjoying how this market is. And the last thing I want to talk about is the VIX. Another amazing tool, guys, with just very straightforward levels. This year, or at least, recently, I've been focusing very heavily on VIX 16, where whenever the market starts to, rally hard, VIX gets to 16. And usually VIX bottoms at 16, and that causes the market to sell off. Last little bottom here at 16 has continued to kind of take out every big level. It held 16 and it got through 18. That's kind of step one of a warning. And then it kissed 20. That's fine. It rejected 20, but it held 18. And then it broke above 20 and held. And then it capped up to 25 and took out this huge level. And if you look at this 29 level on VIX on a daily chart, that's way back here. Back in, what's that, April, May. Look at ES on April, May. All right, that was this last big drop. And where did it stop? Right at the 50, right at the daily cloud. So again, back to VIX here, another just amazing gauge where it stopped right at a huge level and it broke below another big level. So the bulls are trying their best. So the next, logical thing here for VIX to keep an eye on is what happens at 20. Because if we start to hold 20 and don't go lower, the market's got a good chance, just like it did all week last week, of continuing to fail every time it pops. Where VIX does start to break 18, it can head to 20. We're probably going to continue to rally. But if we hold 20, volatility is still looming right at these critical levels on the market that we just laid out. So once VIX budges to the downside, you're going to see the market unfolding those upside thesis that we discussed. Where VIX holds 20 and works its way back to 25, you're going to see the downside thesis that we discussed. You're going to see ES fail at this key zone. You're going to see ES retest and break this trend line. Where are you? Does that make sense, guys? You tie the indexes with volatility and everything gets timed out as close to perfection as possible. So I hope this makes sense. Let's hop in, guys, to a few setups that I'll personally be watching. With volatility so high, one name that I always like to play is SPX. However, tomorrow, Thursday, going to be a little expensive because they're not same day expiration. But for, heading into Friday, definitely want to take this knowledge, guys, no matter what happens, and always be ready to trade SPX. But one setup that I really, really like is ROKU. So if we take a look at ROKU, one simple reason, guys, I like this one is it's down so much. It's down so much, and it's kind of refused to go lower here for the past week, even though the market's been dumping. It's kind of over, and it's showing little glimpses of hope. So what happens with chop? Squeezes. We got a beautiful, tight 4-hour squeeze here on ROKU. So I would love to see this one. Again, all matters if the market pops. If the market goes lower, ROKU just goes and retests the bottom of its range and holds. Very relatively strong. So you might assume when the market starts to rip strong, ROKU's going to catch up. ROKU could be a really good leader. So I want to pay close attention to this one. If it can start to work its way through 225 range through 330, I think it's got a good pop up towards the 340 plus range. Right now, if we look at a drawing set here, where is it? Here we go. So point of control was above at 338. We've been sitting here long enough where point of control did step down, but both levels are still very valid. So that's why back to a 4-hour chart here, I would love to see, right? Remember this 338 level. Just want to clean this up. Would love to see a push off of point of control. We get that, magnet and cannon effect, if you're familiar with that. You can get the explosion. We can take out 330 and go right back up to that last consolidation range, right up towards that last point of control. ATR about 13 points. So you can see 13 points gets us right back to that 338 level. Love this setup. If we look at the daily chart here, all right, bottom, they got to go get that daily mean as well. Got to go get that reversion to the mean. Right now it's at 338, the same level as point of control. So you guys can see ROKU's kind of stuck in this range. So the best, trade is buying low off of the range and seeing if it starts to rally. Second best trade is when it starts to actually break through it and the market starts to pop hard. Most likely when the market breaks up, it's going to pop hard and it's going to squeeze some shorts. It's just how the market works. So we could get a really good breakout in ROKU through 330. and looking for that 338, 340 range. Don't want to be too overly, caught from the bullish side. But again, if we see everything we need to in the markets, it's a beautiful 4-hour squeeze. And another thing I really like about Roku is it's doing a 4-hour cloud reversal, or starting to at least. It's going to have to start to break through this cloud to actually make the trade valid, fire that squeeze, and start to work up towards the top of it. So again, you can kind of zone that 338 with the top of that 4-hour cloud. 13-point ATR with a few days left in the week. Not crazy to assume it could run 17 points. So I really, really like Roku pushing towards that 340 zone. And if you look at some calls here, the 330s are a nice strike, 335s. I'd be careful on the 340s just because they're so cheap. But the 335s, 330s, and you can always play in the monies if you'd like them. But for OTMs, really like these 330 calls. If you take a little bit of a dip and get it in the squeeze, those can offer awesome risk reward. Next up here, guys, Moderna. I'm talking about this one a little bit if you follow the newsletter that Taylor and I do. If you guys don't follow the newsletter, make sure you check out in the comments. You can subscribe to that, just get a little bit more content per week. But this is one setup that I laid out earlier in the week that's been unfolding really nicely. And it's been this little big wedge on Moderna. Got a nice breakout on Tuesday, right at point of control, and ran right to the key zone. Pulled back today, and if you're in the options room and simpler, we played this one. Hit point of control, rallied right to that zone, continuing to work its way higher. Today was a beautiful test of that point of control, rallied to that zone, took out some targets, and held that zone, kind of sitting in between it. So I want to see if this trade and this wedge can continue to push through these key wicks. And if it does, it should cause a pop up towards the 460 area. So again, it's up a few days here. So always want to be patient because if you look, is trending up here. So eventually could break down. But I like to focus on this 4-hour, call it pennant flag that's breaking out. Want to see if we can get a continuation. So again, if we look at this zone, want to see it hold 438. Ideally for this trade to, have a good shot of breaking towards that 460, it should hold 338 level. So again, this is something where if you're going to trade it, look to see if it takes a dip towards it, holds it, and then you get your entry. As a day trader like myself, you want to make sure, guys, that you're entering at the lows, right? You don't want to buy Moderna here. You want to be managing your trade. So again, you don't want to wait for this thing to break out. You want to see if it can pull back, prove itself, and then you start that trade thesis and manage it and see if it starts to actually unfold. So I want to really look for a dip buy at 438 if it holds and see if it can start to push towards that 446, right? You get your entry low, you ride it up, you manage it, you're already up a lot. And if it actually breaks through it, you're now feeding the ducks, quote unquote. So I like this trade. And I also think, guys, it offers a downside potential where, if you just clean this up real quick, right, we also could start to break down. So again, it might go sideways into tomorrow. We got that resistance, right? Kind of cross-referencing to drawing sets here. But we got that resistance right here, where if we do just kind of top out and break back down, gonna look for that short right back to point of control, right where we ripped off today. Right now it's at about 429.55. Can just call it 430. So Moderna has an ATR of about 24 points, right? Always puts in a good amount of range per day. So assuming it can break out of 446, 24 points, technically could go see that 465. So it's enough to fit our logical target. And then to the downside here, again, if it just, opens flat and dumps it open, or maybe it, pops and then pulls back and dumps end of day, who knows? But if it does break down this wedge, ATR, of about 24 points, that's an easy short. And it's going to be a really well compensated short because we're heading into the end of the week here. Oh, excuse me. So I really like Moderna to both sides. It's a volatile name. It moves quite a bit. So there's always opportunity up and down. And I really, really like it. So again, the bigger picture thesis is breaking out and continuing this wedge, but it's already made a 2-day move. So it might be time to watch the higher lows, hit resistance, and break back down towards point of control. Great looking setup here. For the downside, want to focus on the 430 puts, right? Want to look at these around 2.3. So again, if they can just kind of open flat, maybe up a little bit, these can be around that $2 range, and they offer an amazing risk reward. So I really like the 230s. Wouldn't go further than 225s because that also kind of gets you down to your range. So the 430s, 425s, both really, really good strikes here on Moderna. And then to the upside, again, ideally we'd want to see a little bit of a pullback towards that 438, 437, which if it does that, guys, it's also going to be right at that trend line. Sorry to not have these on the same drawing set. Right around that trend line, that 438. So it could retest it and then explode or break it. Same inflection point. But for the upside here, again, we want to kind of target a 460 push. So I want to keep an eye on the 450 calls. Those are really, really good volume, really good, risk reward. And the furthest I would go, guys, probably not even the 460s. If you get a dip, you don't need the 460s, but 450s, 455s, you consider the 460s. Just don't go too far out towards the end of the week. But a lot of good risk reward on this chain right now. And then finally, guys, one more setup that I want to discuss here is Facebook. There was some news today from Facebook. You obviously can see big news reaction here right before the bell, and then to continue to dump all day. They said Apple's ad changes to their policy are causing a hurt to their business, or going to cause a big hurt to their business. Big volume sell, big drop here today. Huge daily volume, 43 million, average of 13.7 million. That's big. Another big indicator here, guys, is the cloud. For the first time in a long time, actually, yeah, ever since March, Facebook's under it. Not a good look. So Facebook, in my opinion, two ways to approach it. We had a really big support level below here at 334. If you look at the moving averages as well, 200 is not really in play. Let's just go peek at the weekly mean. Already on it as well. So again, here's how I kind of see it, guys. Keeping it simple. Under the cloud is never a good look. Isn't, not something that works 100% of the time, but this usually means it's in some trouble. However, two ways to approach it. One is playing the breakdown. So again, we got today's low and we got that 334. This is kind of the basic zone that I would focus on completing. To the upside, if it does end up holding and they do buy this back up, always possible, you got a beautiful little gap fill here. And you also got a really nice little daily cloud level right in between this little flat bottom here for the next few sessions. So just for an upside zone, and they look like they're going to be very similar sizes, which is always a good benefit. Here we go. Oh, grabbed a wick. Here we go. That's why I see Facebook. So again, you don't want to start your short, guys, if it comes back to 340. You want to see if you can short against 350. If you want to buy the dip, see if it holds 340 and then look to start that long trade. If it breaks to 350, you can take out that 352, 353-ish. And then you got the gap fill to 355. But if it can't break 350, good chance it's going to continue back to 340. Breaks 340, you're looking at 355 as your next target. So this offers opportunity in both directions. I would be very, mindful forcing the long side just because it doesn't have to go higher. It also doesn't have to go lower. It can just go sideways while they digest the news. But with the market kind of popping today, Facebook did nothing. So the news is very real. Got to respect it. And you can't get too ahead of yourself with calls. But like any trade, guys, if you get a tight entry at 340 while it's holding and it breaks it, just get out. But if it does hold, you can start to capture a really nice possible trade here. So ATR about $8, close at the lows, drop to here is $8. Perfect. If you buy the lows back to the top, it's about $6, $7, $8 back to that cloud top. Really great ranges here on Facebook. So it can fill the gap this week or can go to 350, 335. Real quick here for some options for the upside, guys. Off of this zone, I'd focus on the 350s and the 345s. Facebook's cheap. You don't got to go too far out. These both offer some decent risk reward. And then to the downside here, if you do pop and start to short it, you want to focus on the 345s, 340s. But if it just sits here and starts to break, then I'd focus on the 340s and the 335s. So you're looking at these three strikes here. And then for calls, kind of, want to stick in this range. Don't want to go further than 350. So that's my thoughts, guys, on the market, on Facebook, on everything I just shared. I hope you guys found some value. As always, make sure you drop a like, give us a comment, make sure you subscribe, and I really appreciate your time. Hope you guys enjoyed. Go apply this information, go kick butt, and I'll talk to you next video. Thanks.
Hey, Focus Chain here with Simpler Trading. Thank you guys so much for watching this video. If you enjoyed it, please make sure you like, comment, subscribe, turn on notifications so you don't miss anything that we do. And if you want to see us trade our money live in real time, go to simplertrading.com and you can sign up for more. But happy trading, guys. Stay focused. I'll talk to you in the next video.